Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the Aussie versus US dollar. So let's get started. A little review in this currency pair. The price moved higher yesterday. That was off of the CPI data in Australia, which came in a little bit higher than expectations, and put back ideas that the Reserve Bank of Australia would cut rates anytime soon, or at least before mid-year or July or whatever. That helped push the pair up toward the 200-day moving average, and also this green line right here, this higher green line, which represents the 200-bar moving average on the 4-hour chart. So these two moving averages, we found willing sellers against that level, and we corrected lower into this swing area through here toward the end of trading yesterday. And then the price corrected back up toward the 50% and 100-bar moving average on the 4-hour chart. That level came in at 0.65028. So things were staying more on the downside into the close. But in the Asian session and early European session, we did see a rotation to the upside. It was a holiday in Australia and New Zealand today, but we did see increased buying, perhaps people thinking more about that CPI data. Then we had the U.S. data come out today, and initially it was reported that GDP was lower than expectations, and we saw this pop up to new highs for the day. But then they looked at the inflation data, and it was a fast break the other day for this pair, back down toward the low price from yesterday, or not yesterday, but at least the New York session and yesterday, where we found support buyers against that level, and also the swing area through here. So, and what do we do now? Well, we come back up. We did move above the 100-bar moving average, we did move above the 50% retracement, but that didn't work, and we're now below those two moving averages. So if it looks like this point right here, that's what we're in right now, where the price comes up to that level and staying below that 100-bar moving average, 50% retracement, and that's going to be our barometer going forward. If the price were to be able to move above that level and stay above that level, then we'd start to look again toward our 200-bar moving averages up through here, and our high price for the move up to the near the 61.8% retracement. Conversely, staying below this level has this swing area and also the 100-hour moving average / 38.2% retracement of the move down from this high to this low. That's the April trading range as the next targets on the downside. So key ceiling right now at 0.65028 in the close short term for traders. Stay below that level, and we have the sellers are more in control. Move above it and stay above it, and we look toward the 200-bar moving averages on the top side. That's my technical look at the Aussie versus US dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.